Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I will discuss how the market, in many ways, are saying, "Help me, Jerome Powell. You're my only hope." As well as that, Meta joins the rest of the Mag 7 in having a dismal 2025. Plus, the Germans agree to spend a load of money and the impact that has on the European market. But before we get into all of that, don't forget these little videos are for educational purposes only and in no way whatsoever should have been taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, the risks at hand before entering any trade. With that out of the way, let's get started. And let me turn my light on as well. I forgot again. I always forget to do that. Silly old me, show me age. Anyway, yeah. First of all, let's talk a little bit about how the market is genuinely sort of hoping that Jerome Powell will get some clarification, maybe, just maybe, give the market a little bit of a boost, a much needed boost. Because don't forget, today's the big one. This is what the market's waiting for. Is obviously we have the Fed interest rate decision due today at 6 p.m. GMT. Now, the general consensus is they're going to keep rates the same at 4.5%. So nobody's expecting a surprise rate cut, or God forbid, a surprise rate hike. They're not expecting anything. Instead, the main event, or the main thing that the market is really excited about, of course, is the press conference, which is happening 30 minutes later. So at 6:30 p.m. GMT. And as you might expect, the market is going to dissect this press conference with a fine-tooth comb. It's going to go really, really into it because they are generally hoping there's going to be hints in this press conference of maybe we could expect 2 to 3 rate cuts this year. That's what it's hoping for. Okay, we are expecting him to say the word patience. Okay, a lot in reference to cutting rates, as he wants to see obviously a bit more development on this trade war as it develops. Okay, so we are expecting him to say patience, but we just want any little bit of hint that he may give us 2 or 3 rate cuts this year. Now, Goldman Sachs projects the Fed will boost its 2025 outlook for inflation to 2.8 from 2.5. And that's worrying, of course, because obviously the Fed, target for inflation is 2%. So they are expecting them to say, well, inflation is going to go up a bit more than we originally thought, mainly down to this trade war. But then, of course, on the other side of that, Goldman Sachs also expects the Fed to change its economic growth to the US, its projection for economic growth, down to 1.8% from 2.1%. So then again, you've got that little stagflation fear creeping in, haven't you? And let's face it, there's been so much uncertainty driving the market downwards. There is hope that the Fed can give it a bit of comfort, maybe a bit of forward guidance, and the big question, I've already said the word, but can stagflation be prevented? That's the thing they're going to be talking about. And like I say, if Goldman Sachs is right, then obviously that's hints that stagflation could be on its way. If inflation is going up and growth is going down, that is the big danger. Anyway, in reference to this, though, which is a bit worrying, excuse me, the latest Bank of America Global Fund Manager survey, it showed 71% of those surveyed expect stagflation this year. Now, that's the highest level since November 2023. Also, when asked in the survey what was their biggest fear or the biggest thing they think could turn the US economy into a recession or the global economy into a recession, they said trade war. In fact, 55% said trade war. You know, so you had 55% trade war. You had 19% inflation. You had Doge sparks US recession, 12%. So 13%. Was that 12 or 13? Like my eyes are playing up. New geopolitical conflicts. We've got plenty of those going on. 4%. AI bubble, 2%. And European rearm, Europe spending a load of money on arms, a measly 2%. So you can see that it is still really all about the trade war, which is driving it. It really, really is. On another news, Meta, not to be outdone, joins the other Mag 7 for having a terrible start in 2025. Okay. You have Meta now down year to date, 1.25%, Microsoft down 9.87%, Amazon down 13.16%, Google down 15.05%, Nvidia down 15.12%, Apple down 14.5%, Tesla down 42.25%. And obviously, of course, this is weighing on the S&P and the NASDAQ and the market in general. We're going to have a quick look at them at the moment. I mean, we've only got 2 weeks left of quarter one, and it's been the worst performance for the market since quarter four in 2022. And all of those of you who remember 2022, because I do, I used to do another live stream program back then covering the markets. We had inflation, decades high, around, it was 10% in the UK, 9.6% in the US. Economic growth was slowing down. So no wonder the markets was terrible last year. At the same time, not last year, in 2022, same time we had the Fed aggressively raising rates to fight inflation. So no wonder it was bad back in the quarter four in 2022 with all that going on. But still, what we got now is really driven by uncertainty and this trade war fiasco. It really is. And it's the worst performance since Q4 in 2022. Anyway, let's have a quick look how the US market is opened so far today. Let's have a quick look. Okay, so like I said, it's only on a 30-minute. We've had opened with a slight gap, the S&P. So slightly higher than yesterday. So it's currently up, again, measly 0.67%. Currently trading at 5,652. NASDAQ is the same, slightly up. I mean, like I say, we're not going to see probably a lot of activity until we really find out what the Fed is going to do. Tesla, again, a little teeny bit up, 3.59%. That doesn't make up for the 42% loss so far this year, of course. Meta, again, all the Mag 7 slightly up today. But like I say, again, this is all going to be pretty sideways until we get the big one, which of course is going to be obviously the Fed press conference later today. In other news, Germany votes. Oops, sorry, wrong one. got ahead of myself. Germany votes yes to spending 550 billion on defense and infrastructure. Okay, and this is a big deal. Don't forget, it's a big deal for Germany because they've also decided to remove the debt ceiling they have as well, so they can spend this sort of capital and this sort of investment. Okay, so and they've had that in place for quite a long time. So this is quite a big deal for them. At the same time, of course, the knock-on impact on this is the DAX has hit a new all-time high on the back of this. So we're going to have a look at European stocks because there's another point I want to talk about in a minute in reference to European stocks. So yeah, you know, they've agreed to that. It's a big amount. Obviously, what's happened over the last couple of weeks has clearly impacted Europe in the way of how they're thinking, how to view themselves, defend themselves, etc. So this is a big deal. But this moves on to another point, which is really interesting. Because obviously, like I say, the DAX has hit an all-time high. The euro is still trading around a 5-month high as well. You know, that's also helped by a weaker US dollar. But it looks, and I did a video on this several weeks ago where we discussed this previously. Okay, investors are preferring European stocks over US stocks currently. Massively, in fact, they're currently favoring this. And let me just show you. Let's have a look. All right, let's have a look at the DAX first. I want us to look at. And let's have a look. Where is it? Here, DAX. Okay, so like I say, an all-time high. It hit yesterday. Oh yeah, it hit yesterday. Okay, all-time high. This is what I want us to look at. Okay, so what I want to show you. If we look at seasonal, okay, in 2024, it closed 18.13% up. 2023, 19.47% up. Okay, we're only tail end of March. And as you can see, that line is already moving above the other highs of 2024 and 2023. So it's on an uphill trajectory, so to speak. So it looks like there's potentially a bit of momentum there for it. You know, so currently, like I say, it's around 17% year to date is up, and it's only, like I say, middle of March. If we look at the Euro stocks as well, similar sort of pattern, not as dramatic as the DAX, but again, that's where it is now. That line there, the big, thick blue one. Okay, again, very sort of like potential uptrend on that. If we then compare it seasonal to the S&P 500, as you can see, there's the line there, opposite direction. And the NASDAQ too, opposite direction. So obviously there is a bit of favorability between European stocks. Because even if we look at the FTSE, which is not UK, okay, it's UK, but UK is still part of Europe, but it's not part of the EU. Even UK, even the FTSE 100, which hasn't been performing as well as the DAX or the Euro stocks, it's still slightly on an uptrend there. So there is signs, obviously, that of course, obviously, the investors are looking at European stocks or global stocks more favorably at the moment. Let's have a quick look at the euro, obviously, as well. Like I said, I've already mentioned, it's currently enjoying a 5-month high at the moment. Again, two reasons mainly: the weaker US dollar, and obviously Germany, spending the pennies, so to speak. Great British Pound, again, we're still trading below 130, but still at the 120 level. So again, this is mainly down to the weaker US dollar. But obviously, we have got important news tomorrow for the UK, which of course is the Bank of England interest rate decision. And of course, we're going to have to look at it because it's me. And I always talk about it. It wouldn't be a broadcast if I didn't bring it up. Gold, like I say, hit another all-time high again today. So it's almost daily now almost daily. It's currently trading at $3,030, but it came close to around about $3,051. So again, another strong performance, even though it might close lower today than it did yesterday, but only just. Still hitting an all-time high, still shining bright as a safe haven. So anyway, that's basically some of the stuff I wanted to cover. So realistically, like I say, the Fed interest rate decision tonight is the press conferences major, 6:30 p.m. GMT. And then tomorrow we have the S&P interest rate decision. And like I already mentioned, Bank of England interest rate decision. So still plenty of fun still to have. Don't forget, this, of course, is a live show. So you can talk to me anytime you wish, especially if you watch me on YouTube. You can chat to me, ask me questions, or say hello, or share me your opinion. Let me know what you think. I mean, what do you think is going to happen tonight with the Fed? Where do you think the euro is going to go? Is it going to go higher? Or were you one of those who believed at the beginning of the year it was going to go to parity, and now you're going, maybe I wasn't quite right about that? Or let me know, what do you think? Do you think we're going to see a recovery in the market today? Or simply say hello. I mean, if you are watching me, because if you are watching me on YouTube, and even if you're not watching me live on YouTube or live on Twitter, and you see the recording, because a lot of people I know go back and watch the recordings because they missed the live, and they watch the recordings. If you are watching the recording and you have a question or you have a point or something you want an opinion or a suggestion, put it in the comments below. I will see it and I will reply to that comment next time I go live. And obviously, as you know, I go live every single day. So you'll hear my opinion or my feedback on that the very next day. So do bear that in mind. Also, don't forget, if you are watching me on YouTube and you like this sort of thing, by all means, give me one of those. It's nice to know that you like what I do. Subscribe if you like. Hit the notification button so you know next time I'm going live. Like I say, I go live every day, usually about this time, so we can cover the US Open. And if you're watching me on Twitter and you quite like this content and you put up with me, by all means, give us a follow or give us, I think it's a heart on Twitter X, isn't it? If you like it. But yeah, always try to do that. If there is no questions or no comments, if that's the case, not a problem. Not a problem. Don't forget, I'll be going live again tomorrow. Well, we'll discuss what happens tonight with the Fed and what Powell, as I call him, Jerome Powell, has said is whether or not he's given the market some comfort or the opposite. And we'll talk about that and all the other major events coming still to come this week. And like I say, any more developments we might hear in reference to the trade war, which it's been a bit quieter on that front this week, which is quite a nice change. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.